Okay, well, the sound is screwed up. I would just sat there for a second trying to figure out when it was done, and I was looking at the wrong screen. I don't know what the deal is. It looks like that the microphone audio is fine though. Anyways, we got a market here. So, E-mini yesterday. So when we stopped, it was a pretty good push up. And I think that later in the day we got a pretty good surprise to the upside. But it did give up quite a bit going into the close. And now in the overnight session, almost all of that gain has been washed out. So I see two things kind of pressuring things, at least news-wise, that I can see. One, the sanctions from China did really hurt the tone over in Asia. And two, Europe is still closed and is having trouble getting everybody vaccinated and opening up. Whereas in the United States, many places have been open for a long time. And so, yeah, that is causing a problem. So we come over here, the yields. So yesterday they were saying, Wall Street is doing better because the yields retreated. Well, I mean, it wasn't that much. Okay, but now here today in the overnight, we're getting to more significant levels, at least back to before things were on Thursday, Friday, right? So that is a big positive for the market. Although I would say that rise is due largely to some economic pessimism coming in. And you can really see it in oil, right? Oil just took a huge dip overnight there, as concerns about demand are starting to show up. Now you would think that gold would be down, right? Because we're going to be getting dollar strength from all of this, but it's not. It's flat. Silver, though, taking a little bit of a hit. Silver taking a little bit of a hit, and copper as well. But the metals complex so far not reacting to this too strongly. But you can definitely see it here in the dollar as they pierce 92. So, and that is higher. That is higher than where we were before the Federal Reserve meeting. So it looks like it's not over. I don't know what else to say. Now, we do get current account here at 6:30. And then at 8 o'clock, we get Richmond Manufacturing. Well, 10 o'clock Eastern time. We get Richmond Fed Manufacturing Index, new home sales. And then we've got some bill auctions, a couple of Fed speakers today. It could be an interesting day. It's a Tuesday. Oh, yes. And then the big one is that GameStop earnings are tonight, right? So GameStop earnings, that's going to make a big difference. That's going to tell us a lot about that stock, how they react to the earnings. So, good morning, Kyle. Good morning, Bill. Let's come over here onto Twitter. Major Biden tax hikes eyed for next bill. The corporate rate from 21% to 28%. The minimum to 21%. Top income rate to 39.6. Ending all fossil fuel subsidies. Tax investment gains greater than 1 million as wage income. This is terrible. Tax assets passed on at death and no to SALT. Man, so I don't think there's any way that will pass, but that would be, if they passed that, the market would take a big hit. Like think about how much the market rose when it was Donald Trump and they were passing a tax cut, and now realize that the tax raises that they are proposing specifically target the stock market. Yeah, it would be bad. I think that it would really hurt the stock market. Okay, let's go through here a little bit more on Twitter, see if we got anything. How do I draw support and resistance without doing it? I wouldn't even bother drawing them, my friend. Those lines that everybody thinks matters don't mean shit, in my opinion. I end up with 50 lines mad close together right now. I'm short Brent crude, but I can't even understand my own analysis. Yeah, no. Listen, the market. So let me put it this way. A lot of technical analysis is based on the theory that you can read the plays that large players are making and try to front run them. Okay, that's not a bad idea if you can detect when they are making their moves early enough to actually front run their orders. And the issue is that by the time price has risen enough for you to see it on your chart and start to say, oh, okay, there's this line or this line that matters, it's too late. It's already too late because they've already moved price, right? You want to be getting in when you see, unusual volume right at the beginning of their large meta order that's going to come in, right? So you're talking trash about our magic lines already, mister? Right? So the big players, so for instance, if you worked at one of the large banks executing orders, large meta orders for big hedge funds that want to use you to get more efficient execution, you don't draw trend lines. You don't. They don't look at any of those things because they don't really matter. And they can look at it and they can say, okay, like there's a trend line going up, but guess what? They're there to sell it. They have a large meta order to sell, so they don't care. What they care about is selling it and executing, getting the most efficient execution possible, right? So they don't look at the trend lines. They just completely ignore them. I'm not going to lie, I agree. I've been trying to find price action successfully for 5 years. It's not got me anywhere, failing me. Yeah, well, price action is a really interesting one because everybody seems to believe that it works, but nobody can clearly define it, and nor can anybody show me any evidence of efficacy. Okay, so we get current account coming through here. Come in higher than expected. Market not reacting, which is, that's not one that we've ever followed very closely and that I've ever seen move the market. So yeah, but it's funny because I find so many people are convinced that price action works. And the only thing that I've ever seen with price action is Max system. And the main thing behind Max's system is that the stop is twice as far away as the target is. So that doesn't really prove that any of the things that he talks about have any efficacy, right? So here's my recommendation. Search for information that shows a consistent behavior in markets that cannot be explained by a random walk. A specific inefficiency in the markets. They do exist. The most common one that I will cite, because this is one that is widely known, is that volatility tends to cluster. Hence, when you see a big rise in the VIX, you tend to get a bunch of days where the VIX rises up a bunch, right? Because volatility tends to cluster. Right? That is not random. Do you believe multiple time frame price action analysis gives at least an advantage from a risk management perspective, bigger picture and asymmetrical risk return? Well, I do think that I will try and factor in everything that I can. I have found some stats to suggest that whether we are above or below the extended or regular session open does have an effect on your probabilities from there. So using that as a filter helps a little bit, just a little bit. It's probably not enough to make you money, but that's one of the things that you'll find is I have found a lot of technical indicators that break even. And when you have a technical indicator that breaks even after commissions, that means you don't want to take the opposite of that trade, right? So if it gets break even, then basically if I get a profit factor of 1 on that trade, if you were to take the opposite of that trade, you're going to get a profit factor of like spot 6 or something like that. It's going to be down there, right? So that means you don't want to do the opposite if it's break even, right? But that's just base. That's not going to give you an advantage, right? You need to find something that the market hasn't factored in, right? An inefficiency that is not widely known. Would you swing trade the same way you day trade? Well, I would incorporate the way that I day trade into my swing entries because my edge is very largely has to do with getting an efficient entry. But I would have to incorporate a lot more to be able to swing trade it, yeah. That makes sense. I'm going to get back to indicators that have worked all right for me, like the ATR, trailing stop, moving averages too. Just some of the best ones aren't widely available. Yeah, well, so for instance, I found that a whole moving average works pretty good. So like if you take a whole moving average every cross, that gets you to break even. And I've used it in some systems that have shown some efficacy. One of the things, so there's this interesting thing about there's different steps you get. So you get a lot of technical strategies and really the ones that are the most popular that are not going to work or they'll be just break even. We're moving up a little bit, by the way. Those ones you're going to trade and you're not going to make money. Then there's another subset that you get that people that are backtesting things tend to find these, right? The majority of the things that they find fit into this category. And when those backtesters are new, they often make the mistake of thinking that means it's a good strategy and to trade it. But what you'll often get is you get a strategy that you'll run it on the S&P 500 and it is profitable. But the only reason that it is profitable is because the S&P 500 has an upside bias, right? So there is an edge that I would have to say cannot be explained by randomness, right? Is that the S&P 500 tends to move up. And certainly if you've been doing it over the past 10 years and you have a strategy that favors longs, you're probably going to make at least a little bit. You'll have ugly drawdowns and you'll probably blow out from the drawdowns, but you can get by on that, right? And so if you can at least get to those, that is a step in the right direction, right? ATR's trailing stop has been an interesting one because I have that on my chart and I watch it, and I have found there to be a very strong tendency to go right up to where that level is, break it, and then turn right back around. Break it for just a little bit, and then they can turn. What I mean by that is, although you certainly would have probably less than 50% win rate trading daily support and resistance, since targets are big and stops on a lower time frame, price action similar to your expectancy. I mean, I had months that I had a 30% win rate and was still profitable by just having a high R. Well, yeah, that's true, but the question that I have is, what evidence do we have to suggest, or not? What empirical evidence do we have to suggest that support and resistance either A has a probability of predicting the direction to some degree that is better than random, or B has a probability of predicting a larger than anticipated move, which is what we would have to be looking for to get a trade with a high R to work, right? So we're going to look at the support and resistance, and we can say, well, it doesn't always work out, but when it does work out, the instrument moves a lot further than it does when it doesn't work out, right? That could work, but can we actually show that happens? Now, of course, then that comes into some trade management, because if you do get the one that works and you can add on to it, and you can make a lot, right? But I mean, it's better than those guys who claim to have 80 to 90% win rates, but we know he certainly just piles on losses until it gets green. Yeah. Well, the ones with like 80% win rates, because I've seen a good number of people posting 80% win rates. If you're doing 80% win rate and you have like a stop twice as large as your target, you probably could get away with that, right? You may actually have an okay system. The issue is just that you're holding a lot of risk, and so you really have to just bail when things are getting bad, right? But if it's 30% win rate and your winner is twice as big as your loser, that's still only going to be like break even, right? Price action works if you have an unlimited money. Well, that's if you have unlimited money. Let me. Here's how I would put this, or here's how I would look at this. Taking on a lot of risk is an edge, right? You can make money by taking on a lot of risk. The issue is that when things get rough, you will have a really bad drawdown, and most retail traders will completely blow out on that, right? So in that instance, taking on a lot of risk cannot be your only edge, right? If you have a system, for instance, Gabby, my algorithm Gabby, so far, she's doing pretty good. She wins about 55% of the time. In the back tests, that's what she hits, and on equal risk reward. And she is performing that way as we are testing it in sim, okay? So if she continues to perform well and we decide to trade her, we could say, because we have a probabilistic edge, we are also willing to take on more risk and trade it on a combine account or something like that, right? And then we can add on top of that another edge, which I will straight up share with you that I have found, is setting a daily loss limit. Almost every strategy that I have come across will have a day or days, regularly have days that are just dismal. They're just absolutely terrible for whatever reason. And limiting your losses on those days always increases the profitability of the system every time that I've tried it. So there's an edge that you can take in your risk management, right? So you combine those three edges together, probably we could do pretty well with that, right? Or I'm hoping that we'll do pretty well with that. But of course, past performance isn't indicative of future results. So there's always a possibility that our edge disappears or stops working. We're going to perform and we do an 85 to 95% win ratio with a poor risk reward, but we have an automated mask risk. Yeah, well, and that's the thing, is that like a large automated trading company or whatever it is can bankroll that and can afford to take on the risk, right? We literally can't put it on an order if we hit that limit. Yeah. I feel like I've wasted a long time on price action. Well, You once said that the opposite of random isn't going to be better, like 30% win rate won't be 70% if we reverse it. That's true. What we really need to assess when testing a support resistance strategy is how better it is from random. Yeah, probably. Well, there's a lot of things that I've come across where with equal risk reward, not a lot. I would say that the number of strategies where I've found a probability, I've found maybe like 2 that have a probability of 55%. Gabby being one of them. And I've found maybe 3 or 4 that have a probability of like 51, 52%, right? So if you have equal risk reward, what percentage win rate do you need to get to really truly know that it's not just random? Because you could say anything over 50% is maybe worth trading. Yes. Especially if it's over a long enough time period that you've tested it. Or you have a really good reason to believe that it's something that will be consistent in the market. Like you have an explanation other than your results, right? We are manual traders, but our risk managers. Yeah, I get you. Yeah, I think that's totally fine. Like the issue that I have with the poor R strategies, like a really big stop compared to your target. It's not that a strategy like that can't work. It's that a strategy like that is usually not appropriate for a retail trader, right? Because at a firm, you can do that max daily limit. And if we're going through a downturn and you hit that daily limit like every day for a week in a row, you'll be really unhappy. But hopefully, if your risk controls work properly, you're not going to destroy the firm and go out of business, right? But with retail traders, particularly with the amount of leverage that most retail traders in futures are trading, that's not going to work, right? Oh, you earn UCN rebates. That's cool. I mean, if I had the bankroll and the connection, I would just do the market making. You've seen the number of times that we've just done a market making strategy in ZN and we've made money. I think that once we figured things out and got a hang of it, I think that we lost like one time off of all that. And that was like just kind of break even. Can you explain volume indicators in trading? Well, wait, hold on. What does Kyle say here? We could test a daily support resistance strategy with a target of 50% the daily ATR and stop 10% the ATR. And then do the same thing with random entries. I don't know. So there's another part to this, Kyle, that I think is really important. You are extremely unlikely to find a true edge by just trying random things and then looking at what the stats that come out are, right? You need to have some sort of real theory, preferably one that can be explained by math, to explain why the market behaves the way that it does and that the strategy is going to take advantage of that. And then you can go in and backtest it and see what the properties of that are, right? So then we can go and we can say, okay, if we do the Kyle model, then at worst, we should be able to break even. Although we might take a big drawdown in the meantime. Right? That's the way that model works. And then if we exceed those certain thresholds, then you just puke out. It's hard to backtest price action too without. Oh, this is so true, David. Oh my gosh. It's not so. Remember I was saying that you get a lot of strategies that if they just go long the S&P 500, they'll work out. So something that you're seeing on TikTok right now, I haven't made a video about it because I just really don't know how to go about it. Like, I've made videos with some people that are like, okay, here's a strategy that this person suggested, and here's what the actual backtest results say. Well, this person actually has an actual backtest, but when you look at the actual backtest, the only reason that it's profitable is because it's trading Bitcoin and it's favoring longs. So it's like, oh yeah, just about anything that you do on Bitcoin would probably look okay right now because all it does is go up, right? So, anyways, that's kind of where you get into like cheating, is that it's a lot easier to find the little aberrations that will make your backtest profitable, like choosing an instrument that has a directional bias, or picking a strategy that has really small entries and targets that are smaller than the average range of the bar series on which you are performing it on. So without doing a lower time frame, a higher resolution fill on it, it's going to say that you made money because it doesn't know what's going on within the bars. And especially if you are trying to find edge by inspection, you are naturally going to gravitate towards those strategies and end up cheating without even knowing it, right? 90% of price action educators are just hindsight traders. Maybe. Okay, but you're asking about volume indicators. So here's the thing that I would look at is, number one, in futures, we can look at market buys versus market sells. Okay. And market buys versus market sells is the best indication, in my opinion, of informed trading, right? So if you come in and you see a really big, a really quick move with a lot of cumulative delta behind it, then you've really got to consider that might be informed trading, that somebody knows something, that there's a piece of news that you haven't heard yet, right? And that's one of the key pieces of how I trade, right? But also the variability of that volume matters. So like the standard deviation of how much volume you get in and what the difference between buys and sells are, and the deviation of that matters for the market making, right? So when you look at the Kyle model, they look at like, if there's the variability in price matters a certain amount and the variability in volume matters a certain amount. And when the actual volume or price action exceeds those numbers, then the model has to adjust. And that's when you see them like pull their orders. What are your thoughts on Cardano? All my friends that don't have any idea or experience on finance think they're going to make a killing. Well, so I don't know a ton about Cardano. My understanding is that it's one of the better coins. I think they're using proof of stake, right? Yeah, it's a proof of stake protocol. So proof of stake is supposed to make it environmentally sustainable. But the issue I have with proof of stake is that it's still like, it makes it more deflationary. Like proof of stake, the reason why so many coins have favored proof of stake is because it makes people more likely to hold it, because they want to hold it and make money off of the proof of stake. And I do not believe that would be part of a sustainable monetary system. So that's the first thing about the efficacy of the coin. But it's intended to be more environmentally sustainable and things like that, so that's good. But the larger issue is just going to be that Bitcoin is the leader in the space, and if Bitcoin goes down, then all of these other coins are going to go down too, right? So like the issue here again, like with Bitcoin, and it's coming. I mean, my model says that it's going to happen. I don't know when it's going to happen. If it doesn't happen this year, then I'm really got a question. We're going to have to go back and rethink some things, right? But it says that Bitcoin is going to crash and there's going to be like an 80-90% drop. And then it's going to take a really, really long time. It's going to take a really, really long time for it to recover. And most people don't get out before that. That's just everybody wants to get out after the top has been like confirmed. And that doesn't work, especially not in Bitcoin, because when it's going down, like the exchanges go offline and the blockchain gets frozen. So you can't move your coin out of your cold wallet. Like you're just stuck. Yeah. Another question. Have you tested Gary Norton's approach? So I do not know what Gary Norton's approach is. I haven't taken his course. I suspect that it's so discretionary that it would be really difficult for us to truly backtest. So I don't know. I don't know what specific edge he's trying to take advantage of. I mean, there's lots of things that I do know about it because I've looked into it so much. If you guys wanted, when we like crowdsourced it, I mean, it's $1,000. Like that, then that's the thing. And $1,000 I want to put into the trading account, right? But if we crowdsource it, and I would definitely do a review and look through it and see what I can see about it. So I don't know. I met a guy who traded it and it's impossible to backtest. And even if we say it's impossible to backtest, so I can trade it and see how I do with it, right? I'm going to guess though. Oh, the guy's name is Bob Lazar. That's right, Keller. So I don't know a whole lot about Bob Lazar, but the whole story sounds suspect to me. Because it is purely based on instant order flow. Well, so is he looking for like specific instant changes? I mean, I don't know. If it's based on an instant order flow thing, that suggests to me that it would be easier for me to automate, but might not be able to backtest. Especially if it is, if it's strongly based on something to do with the level 2. That's exactly, Keller. I've seen that there's that documentary on Netflix, but I've never bothered. Maybe I need to watch it now because we're starting to talk about it. I talked to somebody that took the course too, and they sounded really positive about it. Now, this person, he didn't take the course. He actually paid to be like mentored by Gary. And he said that it was like completely different approach than anything else that he had seen. He wouldn't share anything about the actual edge for me to be able to glean anything from it. So I don't know. And this particular individual will from time to time show me other stuff, which kind of suggests to me that person's still looking for edges. And I don't even know how much he relies upon that or if he's making money on it. So the problem with this kind of strategy is commissions, probably. What is the larger issue is that I feel that if it's out there, that you're going to have a hard time making money on it. You know what I mean? Like, I really think that you're much more likely to find success in futures trading by looking at all of the things that other people have done, seeing what works, what doesn't work, what breaks even, finding consistent behaviors or inefficiencies in markets that cannot be chalked up to random chance, and then finding your own strategy to take advantage of those inefficiencies. And namely, you want to find an inefficiency that the market's not correctly pricing in, right? To do that, you need to know something about you need to be able to say the market tends to do this, right? So also looked into the Bayesian stuff. Yeah, so the Bayesian stuff plays into a lot of these market making models, but I'm still, oh man, like I've done many courses about Bayesian stuff, and then I forget what it even means. It's hard. Okay, David Alphaeus says there's an argument that market harmonics works very well. Okay, so that's one that I'm interested in, David. So I have one strategy. I haven't been running it lately. Kind of what happened was I had a bunch of algorithms that I was running, and because some of them were like a real HFT algos, I realized that I just couldn't trade all of these at the same time. So I picked like 3, and I'm focusing on 3 of them right now. So we might come back to the market harmonics one later. One of the things about this market harmonics strategy that I used is that I suspect that it may fall into that category of it works really well if your instrument is always going up. You know what I mean? But it did appear that it gave you a better entry, that it straight up would give a better entry using the market harmonics. So I think that there's something to it. The question is, number one, was the particular way that we were looking at market harmonics, and I was using an oscillator based on, well, not based on it. They came straight from Euler, or Eller. I don't know how you're supposed to pronounce his name. I think you pronounce it Euler, but the guy that wrote, what is it, the cybernetics oscillator or whatever. That guy. I mean, a lot of his indicators that I've tried are better. Like, it's still technical analysis, and a lot of it is break even, but it is better because he has found ways to get rid of lag in the indicators and account for different errors that show up in a lot of people's indicators. You know what I mean? What do you guys mean by market harmonics? No. So when we're talking about harmonics, we're talking about that the market. Well, so maybe I need to look at, are there any studies that quantify this? The market tends to go like this, right? Like a sine wave, right? And so the idea is that if you only buy when the short-term harmonic is at its lowest point, and you only sell when the short-term harmonic is at its highest point, that you can make money that way, right? So the strategy that I did waited for a certain, I think it was, well, we tested it, right? We created it on stream. I don't remember when. I think it was President's Day or something like that, right? You can go back and you can watch when we tested that. But I think we were using like a MACD cross. So we said, when the MACD crosses, you wait for the next good entry, and then you take that one. And what are those waves derived from? They just have ways of looking back at the past action and fitting what the oscillation of the market is at that time. Well, I blow my nose. Oscillation meaning amplitude. Well, yeah, amplitude would be, amplitude is the height of this wave, right? Okay, so you guys said something earlier. What was it? Ethan Richards, no BS. Day trading is a decent futures course. Very simple strategies that are order flow based. Yeah, I started out with the no BS day trading. When I started out, I was trying to trade the signals that he saw, like straightforward. What I've found is that there might be some contextual situations where you really know what's going on and you can take some of those entries. But my conclusion with the no BS day trading situation is that he's teaching you something really good about markets that I don't think that anybody else really teaches very well, but that his entries in particular won't make you profitable. That the edge in that has already been taken out. And it is probably the case that the way that he traded worked a lot better pre-2008 when the high frequency trading really came in, right? No, when we talk about harmonics, we're talking about like a sine wave. Where where there's a cycle and they believe that they can predict that cycle. Yeah. Okay, so level 2 in bookmap/jigsaw seems worth the price. A lot of us retail traders are screwed by trying to do things for free. Every prop firm or prop trader I've seen, candlesticks are the smallest thing on the screen. Well, yeah. Well, I mean, there's an issue with that, though. Okay, you got to remember that the way that the guys trade at a prop firm like Axia, that is maybe can translate to the way that retail traders trade. Yeah, but like the way that people at Goldman Sachs trade, like retail traders can't do it. You don't have enough risk to be able to put on and make it work, right? So we've got to be careful about trying to, say this is what the pros use and then implement that ourselves, because we're not pros and the resources that we have available to us are different. But then here again, you want to find like your own edge. So on the market harmonics, the first question is that the best way to do harmonics? Or there are other indicators that maybe perform better? And then second of all, what is the actual best way to really try to play that trade? You know what I mean? So I think that's an area that is worthy of more investigation for us. I haven't really backtested anything past week or two. Maybe we need to get back into that. Do you have code? Yeah, I feel like I can program just about anything that people can explain. I've never gotten into the machine learning algorithms. That's another place that we need to get into, but yeah, you know what else? Here's another thing that I want to do is I would really like to make a strategy that trades against RSI. I see so many people. RSI is so popular. I see it mentioned. I don't think I've seen a single retail trader strategy on Reddit and TikTok where somebody shared their strategy that didn't involve the RSI. And every test that I've done of it says that they're misreading the edge in RSI. That the reason they think it's profitable is because they're doing stop and reverse with it and taking really huge drawdowns. And you're going to blow out doing that, right? So Yeah, RSI is probably the worst oscillator. So I'm wondering, could we make a strategy where if the RSI hits 70, that we take a trade? And I think that could be effective because so many retail traders play that, even though we know it doesn't work. So if we can identify really well the situations where RSI is extremely likely to fail, we might have a strategy, you know? RSI, GameStop, same stories, yeah. Oh man, the GameStop earnings today are gonna be so interesting. So let me come back here. I got some notes. So I am. You notice that I'm like way more organized and keyed in today. I finally was able to meet with my doctor and get my medication going again, and it's a lot better. Hopefully I sleep really well tonight too. The baby was like woke up at like 3 o'clock and refused to go to sleep. It works best at extremes. I'm going to bet you that if you looked at it and like the RSI was like below 95 and you took a reversal, then you might be able to have a probability of it working out. Yeah, the problem is where it keeps above there and price continues to rise. What you can do to gain that is waiting for the OB signal and only then place an order above the highs that were made in time. Well, I am not really liking the action here today. And now is a time when normally we would take a trade. But since you guys are talking about that, how do you feel about not trading it today and trying to make those two strategies? Yeah. So let me come in here. Backtest setups. Oh, I have a couple of. Oh, I forgot about that one. Okay. Anti-RSI and harmonics. And this should be to backtest. Ace is looking for long. That's really, which is about what I expected. The issue I'm having right now is like, it looks like a long is definitely in there somewhere, but I don't know where to take it. And the issue is that the news framework that we have set up here is I can't sort out, because in Europe and Asia it's really bad overnight, but in the US yesterday was really, really good, and I don't see any other news going on today. So I don't feel like that some of my edge here is as good. So I feel like since you guys are interested in that, we could go and do that. With RSI, you need to understand that overbought and oversold periods can be lengthy. That's where people get screwed. Yeah, I agree. So let's start out. I mean, let's try and get a little bit more specific, right? Let's just trade the straight opposite of RSI, okay? You can do that with Bollinger Bands as well. I met a guy that was trying to set up against it. When it touched the bands, he waited for the highs to be violated. Works best when bands are contracted. Oh, now that's really interesting. Well, that makes complete sense. But when I've actually tried testing that, but I never considered to try it when the bands are contracted. I wonder what I should use as well. I could use the squeeze indicator. We could use the squeeze to ignore RSI on earnings days. There you go. Okay, well, let's come in here. I have an oscillator RSI strat, and let's create a new RSI strat called anti-RSI. Anti-RSI. Okay. is generate. And we'll come in and we'll pull this RSI strat and copy and paste its logic in there, since it's got like profit targets and things like that in there for us. Anti-RSI. I'm going to bet you that just straight trading against it isn't going to work, but okay, if use targets, let's set those. Bum, 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 bum. And then we're just going to flip these around. Oh, wait. What is it? Okay. Press Alt and move them. It's so much easier. I need to take a step back from trading because I've learned a lot in the last hour. Well, you've learned a lot. You've learned a lot in the last hour, but most of all that we've talked about is just what doesn't work, huh? Volatility. So if you have not studied volatility, David, and here's the thing: is trading directly off of volatility is kind of hard, because you need sophisticated strategies using options and hedging yourself and all of this stuff. So that's kind of hard to trade. But just understanding how the VIX works and how those strategies work is big. So if you don't understand that would be one of the first places I would look. Okay. Yeah, I think that's good. And then we'll pull out the strategy analyzer. Yeah, my sound is not working. Mean booth, blah, 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 blah. Like, I bet you if I read out your messages, we wouldn't hear it. I'm not hearing anything. So I'm not sure what I did. I changed some audio settings yesterday. Oscillators, anti-RSI. And let's use a 16 tick stop. Target. And let's try doing a little bit of optimization. So we'll just do 5 to 200, incrementing by 5s. And we'll also do the smooth 1 to 10. So that should give us a number, and we'll just keep the stop and target set. And we'll do it on the S&P 500. Oh, how come that one's not popping up first? That's funny. Yes, and let's go back. I think we can afford to go back to 2016 here. So I'm not doing tick replay or high fill resolution or anything yet. Yeah, we should talk about the aliens thing too, because I had a thought about our discussion yesterday about aliens that I think could be really beneficial. It's only done 4 iterations. Oh, I thought it would go a lot faster than that. I guess I'm using regular trade or extended trading session and everything else. So it says it's going to take 30 minutes. Always used to fill indicators based on close or missing highs and lows, but now I think about it, it makes sense. Well, yeah, so, but this is another really interesting thing about man charts. And I saw one of these, oh man, there's some people on the Facebook group that, they talk a lot, but I don't think they really know what they're doing. One of the things that a lot of Euler's indicators do is they try and take out error introduced into chart just by the medium of the chart. So one of them is quantization. So what is quantization? So say you have an audio waveform. The easiest way to explain it is an audio waveform. Say you have an audio waveform and, it looks like this. Okay, well, your the resolution is maybe like this, right? So here's this little move, this little part of the wave that you can't see. So if you use quantization, so if you just do it straight up, you're going to get something like this. Here's a point, and here's a point, and here's a point, here's a point, here's a point. And then what does it do here? Maybe here, here, and here, right? Well, what they will often do is, what do we call it? Dithering. We call it dithering. So when you're processing an audio waveform, what they'll do is they'll add a little bit of noise so that this bit right here will get there and touch more. And so what you end up in the dithered file is you get a lot more points down here and a lot more points up here. And because some points are up here and some points are down here, it sounds better on a lower quality thing, right? Okay, so you have these issues in charts, and you can basically look at the time frame and like how much, this is the amount of error that you can get, right? And a lot of Euler's indicators basically account for that, because what they determined was that because of the amount of error introduced by quantization, you're going to be behind by like 2 to 3 bars, right? So if you adjust for that quantization, then your indicator will trigger 3 bars earlier, and you make more money from it, right? So these guys were talking about, oh, well, like try changing the time frame of your instrument and stuff like that. But all you're doing is changing the quantization error. So if you think that that matters to your strategy, you need to go and find an indicator that accounts for that, right? Likely here on Earth, but we can't see them unless we're in a trance, and human history is full of trances and ritualistic drug. What are you talking about? Oh, aliens. We'll talk about the alien thing in a second. Yeah, I do that on FL Studio. I quantize. Yep. Well, that's quantization of the time. I'm talking about the quantization of the amplitude of the wave. But yes, this is like 24-bit sound versus 16-bit sound, right? You produce it in 24-bit sound, so when you process it down into an MP3 and it goes to 16, you have to add dithering or it doesn't sound right. I mean, it still won't sound quite as good, but well, what do you know? It's overfitted hardcore. Actually was able to get a profitable strategy. Well, so what happened on this one was that I optimized on max profit factor, and I should maximize on max net profit. So let's run that again. Anyways, why did we come up into that? Oh yeah, so when you're looking at the indicators being based on the close and everything, those are all problems that occur in there. But that's one of the reasons why I think that a lot of these models, like the Kyle model, because they're, instead of looking for, does the close here, because it basically acknowledges that all of that stuff doesn't matter. And instead it says, how much is price changing? How much is volume changing? And then designing a strategy wherein you don't pick a, you as a trader can pick a direction based on news and everything. But the model says, I don't have to pick a direction. I just have to adjust which prices I'm taking based on the flow, and only take orders at prices where I have the advantage, essentially, based off of the randomness of it. Okay, so while that's going, let's talk about the alien thing. So let me... Oh, I hope Ace is still there. Oh, he is there. He is there. Here's what we're going to do. We're going to make a PowerPoint presentation about this, okay? No. We want a new slide. Oh, wait. How do you pick the type of slide? It's been so wild. It's been so long. Here we go. Blank. Delete and delete. Okay. Draw. No, where is it? Here we are. Okay. So the question is, how do we make decisions? Right? Especially in environments and situations where there's lots of unknowns and we don't know everything about what's going on, right? How do we make those decisions? And I think that that's really how this comes down to. Okay. So I'm going to start here with a default state. This default state is wait for new information. Grid trading, that's, I'm going to have to look that one up. I don't know what that is. What is meant by that? Are you talking about, maybe you're talking about those machine learning setups, or I've heard people talk about grids, but okay. So we wait for a new piece of information, right? So now when we get a new piece of information, I think that there's a next step. Let's call it a diamond, because it's like a decision box, right? Where do I get flowchart? There we go. Let's do this one. Okay. So, is it relevant? Right? I think that's the first thing that we've got to look at, because not every piece of information that we get is really relevant to us. So that's going to include questions like, is it relevant to my interests, or is it going to affect me? Will I potentially have to make a decision related to this information, right? So if it's not relevant, what do? We go back here and wait for new information, right? If it's not relevant, we go and we wait for new information. So now in the context of this, when we're talking about aliens, right? we're going to have to assume that it is relevant, right? Just because that is the topic of discussion. Oops. Yeah, well, that one didn't work out very well. I'm going to delete that one, and I'm just going to change it to a straight arrow, right? So because the topic of discussion is aliens, or rather, what is there evidence of aliens? Actually, in this particular case, so what is the new piece of information? Like, we should define that, right? The new piece of information that we have is that the government has video of airborne objects that they do not know what they are, and it is causing them enough concern that they have mandated a report be written and delivered to the Congress, and I believe to the public as well, on June 1st. Okay, that's the piece of information that we have. Okay, with me so far? So if the topic of conversation is that particular thing, and we're talking about it here, then is it relevant? Yes, because that's what we're talking about, right? If it's not relevant to you, then what do? You say you tune out and you don't listen to it, right? But if you're going to be engaged in that conversation, then that means that it's relevant, right? Okay. Now, we have this piece of information, and maybe there is a claim. Okay, there is a claim in that the government, has seen these crafts, right? What do we do next? What do you guys think? Maybe we can get some participation. What do you think the next step is once we've determined that something is relevant? Oh, here. While you're answering that, we'll add a couple of little. Right here will be. How do I do it? How do I do just text? I know there's a way to do just text. Have a snack, says Uzi. Well, that we could maybe put that in there somewhere. How do you give it a thing? Snack time, nom 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 nom. Oh, he did get his 2 points. Good job. I believe that our brains are blocking out certain information. Well, so this is where. So the thing is that there's gateways in this process, right? So one of the big gateways that we have is irrelevant, right? So sometimes we just assume that it's not relevant when we don't actually know. No. There we go. Yes. Yes, it is relevant. There we go. Is it relevant? If you don't care if your beliefs are true. Well, but so this is the thing again, Ace, is like, okay, so we have a new piece of information. So then the question is it relevant? So you can come in and you could decide that that new piece of information just isn't relevant to you because it wouldn't matter, right? You don't have to be interested in everything. So if somebody came in and they provided me evidence that it would be something that I'm like really not interested in. Well, like for instance, if somebody came in and said, here's evidence of man-made climate change. I personally, that's not my area of expertise, so to me, it's not relevant, right? Right. You can't say the word craft like you said before. I said objects. Did I say craft? I should have said objects. Okay. We have seen airborne objects that the government can't explain and they're concerned about. Yep. And that, according to the Director of National Intelligence, defies their understanding of physics. Right? Did our strategy analyzer kill over here? We may have to restart that. Okay. Unidentified. Okay, sure. So, next question then. What do you think the next decision point is? Come on, guys, you're letting me down. What empirical evidence do we have? Sorry, not empirical. Empirical evidence do we have, right? What empirical evidence do we have? Yeah? This is our first question that should... Now note, Ace, that decision box doesn't say assume that there is no empirical evidence and then ask the person to prove that there is empirical evidence and then look like a fool when they provide that empirical evidence. Do you see that? How that would work there, right? So we ask, what empirical evidence do we have? So if we say we're having a conversation about aliens and we say that it is relevant, and we don't know what empirical evidence we have, then in order to participate in that conversation, we need to go and find that empirical evidence first, instead of just, putting a big roadblock in the way of asking, forcing the other person to provide it. Right? Because we've already agreed, since we're having a conversation about it, we've already agreed that it is relevant. So then it is everybody's obligation at that point to look at what empirical evidence we have, right? What empirical evidence do we have? Okay. Ding, 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 ding. Okay. Now we will have to say, does evidence prove my text is going to have to be a lot smaller. Ian's prove claim. Right? And then there's going to be another one, which is does evidence disprove claim? Yeah? Maybe we should do it sideways. Right? The last one would be, do Illuminatis are hiding it from us? Oh man. So wait, I need this text, I'll be way smaller. 10. Okay. Yes. 10. Oh, come on. Don't be like this, Microsoft. Don't be like, okay. 10. Now I can make them all a lot smaller. Yes, sir. Way smaller. This one, way smaller. Okay. I know that's probably almost too small for you to see, but oh, it's still going in the background, so we're good. Good deal. Okay. Okay. What empirical evidence do we have? Does the evidence prove the claim? Does the evidence disprove the claim? Okay. It depends on what counts as empirical. Anecdotal research frequency. Okay. So that's a good question, David. And that is why I use and focus on the term empirical. You will hear me say this a lot. So what does empirical mean? Empirical means that evidence that a person can go and verify for themselves. So, anecdotal evidence is not empirical because I could go and do the same thing and come out with a different experience from you. So that would not be empirical. But I could go over a large sample period and test 100 people for a particular thing and find a certain percentage that has them and, run my own test and confirm your results, right? So a back test is empirical evidence because you can go and use my code and run it in your own back testing software and confirm that the stats are the same, right? I don't know if quantify is necessarily a requirement for it to be empirical, but anecdotal evidence is not empirical. Okay, so if you're making a decision tree, you don't need a box for doesn't prove. Yeah, well, yes, you do, because here's the thing, is you could have a situation where the claim, let's get rid of this bit for now. You could have a situation where there's not sufficient evidence to prove a claim, but there is not sufficient evidence to disprove the claim either, right? So what do you do when that happens? What do you do when that happens? You have to wait for new information, right? Well, actually, no. There's another part. Which is what we're going to get into now. Do I have to make a decision? Right? So, if you don't have to make a decision on it, then of course, you're going to go back to here. Wait for new information. Oh, I picked the wrong one. We're going to have to go here and wait for new information. You only accept claims that come with evidence. So if we're going to say, okay, so let's say here, so you're talking about, okay, here, does evidence prove claim? So let's do it here in the same thing. Do I need to make a decision? All right, it's the same one. Actually, let's just delete this one and just copy this one. Okay. Right here. So what do you think what happens to all of these? Well, here, one is that well, maybe we'll put these ones on this other side. Do I have to make a decision? And if the answer is no, then we just go straight to wait for new information, right? So if the answer is no, if the answer is yes, oh, actually, let's put this one to here. Okay, if the answer is yes, then we go to decide based on the evidence. Right? Okay. This might get all convoluted. Okay. Can we assume the government always are a step ahead in regards to new information, and then when they follow this fluxogram, they decided to inform us because they already know what it is? Well, so this is the interesting thing about it, is that notice that the question here is it relevant? Yes. And then the next question is, what empirical evidence do we have? The decision tree does not say that the decision tree is not what does the government say? Right? The decision tree is not, does the claim conform to my previously held biases? Right? No, it doesn't. The decision tree asks next, what empirical evidence do we have? Which means that it doesn't matter what somebody else says that it is. It doesn't matter what you believe it's going to be. We have to look at the empirical evidence first. And the big issue that I have with things that I see in society today is that people are saying, don't look at the empirical evidence. That bothers me so much. If not empirical evidence, what do we have? There's nothing, right? So this one here, I'm just going to go and do a couple of these here. This is yes. And then this is no. Okay. And so we need some other boxes here. One is believe thing. Oh, no. Okay. So here, this should actually be does, okay. Yes, then you believe the claim, and then you ask, do I have to make a decision? Then I decide based on that, and then here is, does evidence disprove the claim? Don't believe the claim. Okay. Now here's the thing. This would, and then this one would be, does evidence disprove the claim? Yes. Then here. 10. Okay. Do I have to make a decision? No. Okay. Almost got it all right there. Okay. Empirical evidence is that there was a shooting in Colorado, but anecdotal evidence is that the shooter was the guy with a bloody leg. Yeah, okay, so here's the issue that I had with the discussion that we had yesterday. Was we said, okay, we got a new piece of information, we decided to talk about it, and then we asked what empirical evidence do we have, and the first thing that I heard was, oh, well, you need to prove it first. And it was like, okay, but I have looked at the empirical evidence. I have found that the empirical evidence does not conclusively prove the claim. It does not conclusively disprove the claim. I would say that there is some really interesting stuff on it. We don't have to make a decision, so we are all over here, right? So this yesterday, we're all over here. And the thing that irked me was that Ace was still over here. Catch up. We're over here. We've already found that there is empirical evidence that doesn't prove or disprove the claim. We don't have to make a decision off of it. But this is the one that's really more interesting, isn't it? Right here. This one. What do you do when you have to make a decision and you don't really know for sure what the answer is? Because this is trading, right? Is then we have to go through and make a process. And I'm not going to list down what that process is because it's going to be different for different domains. And everybody's going to want to create their own process. But you would want to create a process that has a probability of making the correct decision despite a lack of conclusive proof on things more often than not, right? That's what we do in trading. So I'm going to call this right here, this box leads to trading in markets. Or let's say why markets exist. Yeah? Does that make sense? You with me? Everyone wanted to just blow off the alien concept and say you need to be more skeptical, but frankly, by admitting the evidence, you are being skeptical, whereas they are being cynical. Yeah, because the issue here is that the question has been, is it relevant? And we said yes, because we're talking about it. So then we asked, what empirical evidence do we have? And there is empirical evidence, right? Which is reports from the government that have been released. So does the empirical evidence that we have prove the claim? No. Does it disprove the claim? No. We don't have to make a decision. So we are waiting for new information, which will be on June 1st. Right? No, there's no evidence of aliens. No. There is evidence relevant to unidentified flying objects that suggests that it could be aliens, yes. There is. See, what you just said there, you're saying that we go here. And that's wrong. That's not how it works. Look at the would you like to amend the flowchart here? Let's see here. Does evidence prove claim? No. And instead of asking does it disprove the claim, let's just go straight to don't believe the claim because it wasn't proven. That's what Ace says, and I say that's wrong. What suggests that? No, because you're saying that because it's not proven, then it's disproven, and therefore, ergo, you shouldn't believe it. Right? There's evidence of UFOs. Aliens is one potential explanation that is starting to become really compelling. No, you're wrong. You're saying don't believe the claim because it hasn't been proven. So it's possible for something to be true even though it's not proven. I think it's very compelling. You say, no, it's not compelling. I don't know if you've actually looked at it. I have a hard time to see how you decide. So what you were saying is just not logically true. Okay? So, for instance, there was a man a long time ago, and he believed that disease was caused by microscopic organisms. And the world said, no, you're crazy, you can't prove that. And they didn't believe him. But was the claim true? It was. So, just because something is not yet proven does not mean that it is false. You don't go from there. You can say, we can't prove that it's true. We can't disprove it. So, we don't necessarily have to do anything about it. So we can just wait for new information. Being skeptical, what does that get you? So here's the thing is, where does skepticism get you? Here's what I say. Go through the process, and you'll be able to make an effective decision. I'd never agreed to it, and I didn't agree to a bet, because what did I say? I said that it's not proven that it's aliens. It's not disproven that it's aliens. There's going to be a report on June 1st. So what should we do, right? We should wait until June 1st and wait for new information. And then we'll look at it and we'll say, is it relevant? And I'll say, okay, yeah, it's relevant because it's this new report about things. So then what empirical, then we have to look at the evidence that we have. And then we ask, okay, does the evidence prove that it is aliens? No. Does the evidence disprove that it is aliens? No, probably not. So at that point, then we're going to come back to the spot where we say, do I have to make a decision? So let's do a what if scenario we get to here. And we say that we're having a bet or something like that, and not a bet, but we're just asking. Okay, you can't sit down and say you don't know. Do you think it is aliens or not? Then where do we get to? Then we get to here. Why markets exist. And we can look at all of the evidence and use our own processes to say whether we believe that they are aliens or not. Let me ask you, I don't agree with that at all, actually. I want to hold as many true beliefs and as few false beliefs as possible. I don't think that that's the goal. I think that the goal here is to be right as much as possible. Or rather, I think that the goal here is to make the most effective decisions possible. Okay? Why does it matter? So here's my question. How does the number of false beliefs that you hold, is that a direct correlation to how effective your decisions end up being? Well, what I am suggesting is that your ability to go through your process and how good your decision-making process is the primary determinant about how effective your decision-making is, and not necessarily whether or not you have something in there that you're wrong about. Or you don't care about that previous because you're being irrational. This is not irrational. You can't argue the validity of a claim with someone who has no interest in the validity of the claim in itself, right? Because the real issue here is that Ace doesn't think that it's relevant. He's not willing to admit it, but he doesn't think that it's relevant in the first place. So, like, here's the thing. I don't have to make a decision, but the government kind of has to, right? So they're making a report and they wait for new information. But once they have that report, what do? What do you think that they're going to do? And then Congress is going to go through their decision-making process and they're going to come out with a conclusion, right? Maybe their conclusion is that they allocate funds towards researching this thing because they determine that based on the evidence that they have, that it's a large enough threat to justify putting money behind it, right? That might be the decision that they have to make, right? What's relevant to Ace is that he's right, but the thing is he doesn't know that he's right. Like that's the problem, is that he says he has made an assertion, which is they're not aliens. That's what I'm hearing. I'm hearing they're not aliens. He says he doesn't believe that they're aliens. And the only way that he will believe that they're aliens is if an alien is standing him in the face. Yes, it is. I never said that. Fix that. Well, then you better explain your words better, because the thing that I'm hearing is because it hasn't been proven, I don't believe it. There's a couple. While I'm waiting for you to respond there, let me fill in a couple more of these little spots in here. And this one right here, what empirical evidence do we have? Should be a square. To think it takes an hour to make a decision tree outlining something our brains do in fractions of seconds. I know, right? But that's the thing, is that how do you go in there? Okay, so my position is there is no reason to think X is true until there is sufficient evidence. Well, so I am not saying that one should believe the claim. I'm not saying that one should believe the claim, but what I am saying is that one may have to make the decision that we should investigate it more, right? So the decision may be to create a program to try and speak to these potential aliens. I don't know. You know what I mean? But no, The decision tree does not say, does the evidence prove the claim? Does the evidence disprove the claim? And then I have a decision box that says, go and believe what I want to believe anyways, and then go back to wait. No, I didn't draw it like that, right? Okay, it sounds like Ace agrees with me. Okay, so are we okay with the decision tree then? Maybe could get another arrow right there. Then can this be cleaned up? Oh, yes, it can. Okay, so then what we need to do, this needs to go and get rid of this. This goes to here. Change this to a 10. To a 10. And there we go. Okay. Right. There we go. And then, do we have to make a decision? Oh, and this one should come out from here, not here. Okay, there we go. And then this one goes to here. There we go. Much cleaner. The tape, someone just hit a big sell order. You know what? It looks like my data died. Did I close it? That's weird. Probably there should have been all these sounds that I should be hearing, but my sound's messed up, so I didn't even notice. So here's the interesting one. This is the one that's going to make Ace mad. Okay. Okay. Not mad, but he's going to disagree with me. Does God exist? And I'm going to say, is it relevant? Yes, because if God exists and that could potentially affect you. Okay. So then we gather the empirical evidence that we have. And there's there's logical arguments about it. There's the Bible, and all religions provide some proof that they have in it. And let's just say, for the sake of argument, that the evidence that we have does not prove the claim. I think that most theists agree that you can't prove that God exists, because there's always this element of faith anyways, right? So we can't prove the claim, and I would argue that we can't disprove the claim either. I don't think that we've ever found anything that disproves the idea that God could exist. Okay. So then we come in at, do I have to make a decision? Yes, you do. So here again, we've run into this issue of why markets exist. Right? So the agnostic person says, the agnostic person says, I don't have to make a decision, so I'm just going to be agnostic and wait for new information, right? That's the agnostic way of going about it. The atheist way of going about it says that I'm just going to go to don't believe claim. So he's come out through why markets exist, and their conclusion comes out don't believe the claim. So then the question is, like, what is the decision-making process that you go through on that? And the argument that I'm trying to make here is that the assumption that if something is not proven, that I automatically don't believe the claim. If my decision tree in here is, if evidence proves doesn't prove the claim, then I will act in the way that is believe in the claim, right? I guess that there should be two boxes here, huh? Let's change this. Decision based on claim true. And then these come to here. Okay. The thing is that decision making isn't based on evidences alone. There's also higher derivative logic when two contradicting claims open up the idea that something could actually be wrong. Yeah. You're wrong about the definition of agnosticism. Okay, maybe I am. My understanding of agnostic was that they don't believe that it's proven. So my decision making goes like something like this. If I am to admit that it doesn't prove, we haven't proved that God exists, and we haven't proved that he doesn't exist, and we have shown that I have to make a decision. What does my decision tree look like? Okay. My goal is to make the most effective decision. So the next question is, how do you define the correct decision? How do you define as the most effective decision? Now this is a more interesting question, isn't it? You see? So I was having this argument with somebody on the forums. They were saying, well, you should be able to go and find out a maximum risk reward. And I said, well, yes, but you have to have criteria, right? You have to have criteria. How do you define what the optimum decision is in here? And here's what I say. In this particular context, the optimum decision is the decision that makes you the happiest. That has the greatest, that leads to the best quality of life. Okay, is that a fair way to define what the best decision is? So I have a decision-making process where I go through and I decide how is it going to have the best quality of life on my, in my life. And the decision that I've made is that just believing in the claim actually has the best impact on my quality of life. And so I believe the claim and wait for new information. That's what I do. I don't think that agnosticism means maybe, because this part of the decision tree is not maybe, right? Which in his mind pretty much meant that he was a functioning atheist. Yeah, I think that an agnostic says, well, so what I was trying to suggest was that an agnostic does not believe that the decision, they don't believe that the claim is true, and they don't believe that the claim is untrue. But they also don't believe that they have to make a decision on it. That's what I was saying as I thought an agnostic was. Does that make sense, Keller? You know, so to me, as somebody that believes in religion, you're inclined to believe that making the decision matters, because if you make the wrong decision, you're going to go to hell. So, you know what I mean? Okay, fair. I think we're on the same page. Feelings don't mean something is true. Sure, but the argument is still that there are times when, for optimal decision making, the optimal decision may be to believe that something is true, even though it's not proven. Yeah. Okay, we need to come back and look at these results because it looks like they over-optimized again. So it only got 43 trades, but it did give me a profit. Okay, so I need to just keep like way more of them. I like them on decision tree. So I think I can extend this further. Just like it's the agnostic thing to admit the evidence of UFO. Man. Well, this is why I feel like that going out through the decision tree process is useful, because now we can sit down and say, okay, like, here's how we go through the process. This is where we're at. And you can point at the diagram and you can say, this is where I believe that we are at this time. And then we can, and then if there's a disagreement about that, we can go back and we can sort it out and agree to where we're at in a spot, right? So here's the next one is let's see. I didn't plan on doing this, but let's see if we can sort out what is Seth's why markets exist. Why markets exist. So I believe it goes something like this. What does the market believe? Many more people are technical atheists than would self-admit. Okay. By the way, at what point did my data die? I want to know. Well, that means that my robots are going to be all screwed up today, huh? That's okay. Sim Beta took one, huh? Is he still in his position? So Brandon did go long. Oh, it's not in a position though. Okay. Okay. Good deal. Good deal, I guess. Okay. What does the market believe? And then I think I want to sit down and say, how wrong can they be? strong might they be? And then I almost never take a trade, though, until I actually see the data. Well, that can't be true, because for investments, I certainly do that, right? And then I think somewhere in here is what does historical data say? These are all inputs into my system. See, in my decision tree, to me, the atheist position doesn't make sense, because in my decision tree, to be in this right here would be atheist, right? Don't believe the claim, which would mean that you would need to have evidence disproving the claim, which I don't think happens. I'm not agnostic on UFOs. Yeah. Well, so here's what I'm kind of saying is that with the empirical evidence that we have, it doesn't prove or disprove the claim. But if we were to make a decision about are there UFOs or not, I'm going to say that there is some benefit to saying that it appears to be a strong possibility. A strong enough possibility that I am interested in this story and want to follow it. You know what I mean? And by knowing more about it and going because I know more about it when I'm at this wait for new information, then next time a new piece of information comes out, I can go through this process and come out with a decision faster than other people can. Yeah. Like, consider what would be the impact on financial markets if UFOs were proven to be real. That's a little mind-blowing, right? I think it'd be good for markets. If June 1st comes out and they say that that aliens are real and that we've like recovered alien spacecraft, I'm buying. I don't know what you mean by it's wrong to be an impressionist. I've never heard that word before. Okay. And there is not a good definition of it here. It wants to think that it's something else. Oh, did our back task finish? Dun, 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 dun. It seems that oh man, Ninja Trader, why? In the debate about the existence of leprechauns, aleprechaunist. The aleprechaunist typically demands evidence for their existence and will quickly dismiss the possibility that they exist if none can be presented. The aleprechaunist generally claims that he or she is on the side of science, and those who believe in leprechauns are not. Since aleprechaunists claim to use a specific method to base all of their beliefs and claim that believers in leprechauns do not, I have a couple of questions. Does science form conclusions about anything? Yeah. So here would be the answer. Here would be the answer to this. I would say that I am a leprechaunist, which is that I do not believe in leprechauns. And now, how did I come to that conclusion? Well, let's go through our decision tree. Okay. So we have a new piece of information, which is a claim that leprechauns exist. Is it relevant? I have decided by talking about it that it is relevant. Okay. Let's gather the empirical evidence. I have never seen any empirical evidence in any way, shape, or form that suggests that there are leprechauns. Okay. Is the absence of empirical evidence proof that something is not true? No. It's so we can't say that the evidence proves a claim because there is no evidence, so we can't prove a claim, right? Does the absence of evidence disprove a claim? I'm going to say no. Do I have to make a decision? We have said that we're going to say whether or not we believe in leprechauns, so I'm going to say yes. So then we have to come into why markets exist, right? So then we come back into what is the thing that we are trying to optimize for, okay? And in this case, as is in most case of life decisions, I want to make the best life decision, which is the decision that benefits me the most. And I am going to say that the decision that benefits me the most is to not believe that leprechauns exist, because people who believe that leprechauns exist are not going to be treated well in this society, because it's a silly thing and most people don't believe it. And so here in this particular instance, that going along with the crowd, especially since there is no evidence, I think the correct decision here is to say that leprechauns don't exist. Well, that makes sense? It was good. That was a really good illustration. Thank you for that, Keller. I just want you to see that living as a leprechaunist is valid in the same way that living as an atheist. I would say probably. So I don't think that saying living as a atheist is invalid, because here's the thing that I am kind of admitting is that this box right here, which is why markets exist, is not empirically proven, right? Which is to say that there are situations where we have to make decisions on things where an optimal decision-making process has not been proven. And so it is up to the individual person to determine how they're going to make those decisions. And how they make those decisions is going to have an impact on their life, right? And so I cannot say that one method of deciding is better than the another. I can only say that one method of deciding will result in certain outcomes, right? So, like, for instance, let's take it into the political realm, and we come in and we say, okay, how much should we, to what degree should we favor profits and freedom over fairness? Because I don't think that anybody believes that society should be completely unfair. I think that there is, like, if there was one person that had all of the money and everybody else in society was dirt poor, you know, like literally struggling to live, I don't think that anybody would believe that that is a fair system, right? Or is a good system, rather. So I think that there needs to be counted into it some degree of fairness, right? And every person individually has a process for how they determine how much they think that fairness should factor into it, right? And yeah. But I think that we are culturally told that God is real so much that it seems to many that the burden of proof is on the atheist to disprove the existence of a God, and frankly, that first level. Well, and that's kind of the thing, though, is in my decision-making process, the opinion of society matters, doesn't it? Isn't that funny, coming from me? But it seems to me that believing in certain things or disbelieving in certain things has an impact on you based on whether or not society at large believes in that thing. And that it is detrimental most of the time to believe something that society is opposed to. And if you're going to believe in something like that, you better have a good reason, right? Like, I can come in and say on voter fraud, does evidence prove the claim? I don't think that they've conclusively proven that there is voter fraud, because you would have to go through a court, and there was never a court proceeding that got far enough that there was a court claim that proved it, right? Does it disprove? Well, some people say that it's been disproven, but I don't agree with that. I don't think that it was properly litigated. So I'm going to say that it wasn't proven, and I'm making a decision about what I'm going to believe, whether there was or was not voter fraud. So then we go into why markets exist, and then we go and say, what does the market believe? Well, the market believes that there was no voter fraud. And when I go through this process and I say, how wrong might they be, and what does the historical data say? I would say that if they're wrong, then that is a very serious problem with our democracy. No, it's a big deal if there was voter fraud. Okay. How wrong? So how wrong might they be? I think I want to add another box in here, which is how likely are they to be wrong? Right? And so I'm going to go in and I'm going to say, based on the historical data, how likely are they to be wrong? Decision. Here's the decision, right? So the conclusion that I have made is that there is enough question around it that I think that it should be talked about. That's a decision that I've made, and that's how I've come to that conclusion, right? Oh, this is fun. I enjoy this. So the question for you guys really should be at this moment is, what about Seth's decision-making process might be inefficient that we can improve, right? I've suffered a lot from my views being hated by many people that I've loved. Really? I know that that's a thing, but it's not something that I've personally seen from people. But it might be a sort of a thing that you're not looking for it. You may not see it. Gabby took a trade there. That trade might be wrong. So we're going to save this as save as decision making. This PC. Documents, decision making. So now I'm really interested in, now that I feel like I have mapped out maybe what my own decision making process is, I'm interested to go and look and see if there is more information and data on what makes effective decision making. Groupthink and participation is what separates us from other animals. Well, other animals also have groupthink, but it's definitely different in humans, isn't it? Okay, do you think that it saved our last result? I don't think that it did. Oh, no, maybe it did. But it looks like I can trade against the RSI and make money, but on what properties? Stop target a really long period. And these are all long periods. So I'm not sure what to do with this. So this is another one of those posts that you want me to put the file into Discord. Okay. Well, I'll put it in the lobby. Documents. Decision making. Upload. There you go. Now, interestingly enough, some of these do have a good profit factor. But we were optimizing on max net profits. So yeah. Well, I think that in my somewhere in my decision making for a non-market process is what would God think? Yeah. The market really fallen over here, huh? So let's go back to our. So what do we got? We got an hour left. We've got an hour left. So we went through. We tried trading against the RSI. We found that there are some time frames where trading against the RSI can be beneficial. Wait for it to get overbought and then put a stop buy order above the highs. Okay. How can we do that? So first, let's open up the indicator again. So this one is just going to be naive anti. Okay. Trade into highs. So I need an indicator that gives me the high and low of the session. What do we got? I think we do have that, right? Isn't there an open high low close? Or maybe you just use a different time frame. Oh, not strategies. Indicators. I know there's the previous session prior day open, high, low, close. Oh, maybe maybe it is under current day open, high, low. Ah, yes, there is. Okay. So, indicators. Current day open, high, low, blah, 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 blah. Okay, I think we can use this. Low, show high, show. Okay. Current day OHL. OHL. That's what we'll call it. Cool. So we want to say something like copy. If cross above my RSI, and let's say that it really gets overbought, like 90, and then enter stop long, right? Let me just verify here. Ninja Trader. Well, this will always happen at the close of a bar. So my question is what? You get it overbought and it's above the high and then you buy into it, or what? I really do appreciate that you guys gave me a chance to be heard, because I rarely get that chance, and we may disagree about the specifics, but you are all very intelligent. Well, thank you very much, Keller. Yeah. Huh. Interesting point, RJ. Groupthink Seth on herd level, but not species. 10 monkeys can accomplish what 10 humans can, but imagine 100,000 monkeys on base of what 100,000 humans could do, or 7 billion. But I'm wondering though, is there something unique to the groupthink in humans, or is it just that groupthink has different implications when the group is capable of higher level thinking? Yeah. If RSI gets overbought while making new highs for the session, wait for the bar to close to put a stop buy order above the highs. Okay, so if cross above my RSI 90 and cross above how do I say this? Open high low dot high of 1, is less than close of 0. So the high was broken on this bar. Then we enter but then you're saying you want to enter a stop. So is it like, are you saying, so here we have a high. Let's use yellow. So we have the high of the day. It comes up to the high of the day like that. And then down here on the RSIs, the RSI is above this. And then you're saying that next time it breaks this right here, I go long, right? Right? Okay, so what I think I want is enter long stop limit, open high low, dot high of 0 plus tick size is the price. And same, there's a limit price and stop price in signal name. Okay, so I'll leave those to be the same, and the signal name shall be high break long. Like that. Yeah. We'll only go long. We'll only do this with longs for now. Let's see. Now let's change our backtest so that it's only today, shall we? Oh dear, what happened here? Oh, Gabby, say it ain't so. Oh. Wait, do I have a position on? Oh, that sucks. So what happened was when everything crashed, Gabby got stuck in a position long and ate that. So I don't know how we're going to deal with that. Or we're just going to have to remember that there was that day where that particular trade was not legitimate. Stop orders getting triggered and stuff. That's the stop orders from the RSI setups that we think are going to trigger right. Ah, gotcha. Okay. I think that we may need to do it a little bit more than that, but for this, let's just go back to January of 2020 and do the back test on that. All right. Use targets true. Stop and target will be 16. 16. Oh, did I not optimize that when I was running it before? Well, I guess we'll find out. 5. 200. Increment by 5. And I really don't believe that the smoothing matters all that much, so I'm just going to leave it at 3, all right? Because I don't want another backtest that just takes forever. I want to start iterating a little bit faster here. $40 should be much easier. Okay, so it looks like none of them took trades. No outputs. 40. Okay, so there's something wrong. Oh, there's a strategy on laser that we can get rid of. So there's something wrong with that. So let's try something here. Just this interlong. Maybe it's just never hit 90. Maybe 90 has never been touched. I don't think that that's true, but maybe our conditions are just too specific. But want to, yeah, okay. So let's just say 70. Is there a proper time theoretically to use a stop limit as opposed to a market stop? Well, I think in this instance, I would rather use the limit order. The thing is like, does it matter that I get that exact price? And in a lot of these algorithms, it does. So I think that using a stop limit totally appropriate in that case, but that's something that you can just kind of test. Okay. So it works. Hey, 55%, but it doesn't happen very often. So I think that if we gave it a little bit of leeway here, right? So the cross above the RSI can happen within 5 bars before it breaks the high. That built? Okay. I don't hear the sound, so it's like, I don't know if it actually built or not. Oh, wait, that didn't give us more trades? Oh, it did. It did, but it was only 189 in the past year, which is about like what, at one every other day. I guess it's not something that you should expect to have happen. Oh no, it takes 3 trades per day. Wait, oh, you know what? We didn't change the time frame. We gotta go way back. We could go way back. Do that. You know what? When you optimize on profit factor, that can be a real problem sometimes. This is, we could make a TikTok about this one if we want. Oh, look at that. And look at that. Yes. 25 period RSI with equal risk reward. 51% of the time. Some of these are 60% of the times, but I only took 3 trades. They only took 3 trades. Who cares how many trades? It matters because, well, so the thing is that the only one of these that actually has enough data for us to say anything is this top one, right? So 1,384 trades, 3.85 trades per day. That is enough to say, okay. But then when you actually look at the stats on this particular one, like profit factor 1.03, it's not enough. I mean, like it's covering commissions, but okay. So it did awful in September or in March. So that could be a function of it only goes long. So let's go and write the short side of it. Cross below the 30 and the low is greater than the close of 0. Enter short like that. Gorillas can't imagine there's gorillas 5 valleys over group think they can't. What is that property called though? I don't know any. Okay, I mean I won't dispute it, but interesting that you single in on that. I actually think that it might be more effective on the downside than on the upside. I'm gonna suspect that it's when everybody's buying it. Well, actually, no, I take that back because, well, I don't know. Like buying the dip definitely works, but there's definitely those places where like everybody tries buying the dip and it goes through them, and it's not until they all give up that it buys the dip. You know what I mean? So, well, let's just try it. Let's just try it. Don't forget to set a limit of how many consecutive trades per day. Well, we can do the risk management stuff later. Oh, hey. Okay. So, well, that one took way less trades. The top ones that came out took way less trades. But like 48 over a year, you know, like this top one. Oh, I actually got an outsized winner that shouldn't happen. 0.18 trades per day. Interesting. Sorry, some of your comments on the earlier discussion, I can't follow at the moment because I'm thinking about the back test now. I should have traded it today, but I mean, there's been some good movement. I don't know if I would have done well on it or not. I'm really mad though that Gabby got screwed up. She should have bought that last one. Like, there would have been good trade. And I think the one that she took as a buy that was false signal, you know. So there's gonna be some that take way less trades, right? So the issue on this one is that we've come across something that's so tight, so common. So let's just come back here. One minute. Sure. So what does it do on the common RSI? Okay, so on the common RSI, it's hitting spot 9. I wonder if I do something like a longer target, if that's better or worse. It's better. Not a high enough percentage. The long trades, it seems to work too. The max trades per day should only be used if the risk is bigger than profit, but you can, well, yeah, but again, what we're trying to determine first is what the actual tendency of the market is. Once we find something that is really conducive, if we say, then we can work it out. So it seems to me that on the RSI that everybody uses, that this doesn't really work. Could do 10 period. 10 period is one that's probably going to be common too. Not any actually worse. Okay. It seems to me that you can get this to work if you have a high enough time frame of a moving average on it, but that overall, I'm going to say this one doesn't work. It doesn't take enough trades for the ones that do work. There could be some more that we can do on that though. But I want to try something else here if I can. Copy. Paste. Okay. Oh, why did I put a extra space there? Okay. R squared R2. R2 equals R squared of RSI period. So we'll use the same period for both of them. Oh, that was wrong. Comment that previous test out. And I'm going to say if we're crossing the 30 line and R2 of 0 is greater than spot 8. So this will be, there's a really strong trend and it comes into that RSI. A really consistent trend. Will the trend consistency win out against the RSI? Okay. So let's just run this with just like the default 14. Oh, hey. Oh, we have a different target set. I'm going to set that back to 1. Okay. So it's close. But it's kind of the same thing as before. This one, if you try and let it run, it can work out. That's curious. That's really curious. I think that we ended the decision-making thing. I posted the decision-making PowerPoint slide in the Discord, so if you want to go back and modify it, you can do that. I was reading a message from Uzi there. I didn't completely understand what he said, but I'll have to ask him after stream. He was asking me to try something out. What am I? Oh, yes. Okay. optimization. So we will optimize the targets and the RSI periods. 5, 200, increment by 5, and optimize on maximum net profit. Okay. I think you're getting ahead of us, Kyle. Could you please set the target to 10% of the daily ATR 20 periods and set it to stop trading for the day if it gets stopped? So like dynamically setting them, I have found on a 1 minute chart to not work. But that's again something where it's like just seeing if there is an overall tendency in the market is better. And then once you've got that, then you go and you add all that other stuff in, right? Because when we start adding all of those qualifiers to it, it doesn't actually tell us anything about the RSI. You know what I mean? It's not that many. Yeah, well, but you're saying like, so the thing is what you want. Let me explain. You want like a funnel, right? You want to have this, all of these trades, right? Now, everything that you're talking about there, what is it going to do? It's going to decrease the number of trades, right? So what I want the widest data set possible so that I can analyze this and see what is there about this, okay? Is there an actual market behavior there? And then I can go through and I can start adding risk management and stuff like that to filter out bad trades. Because those sorts of things are the ones that are going to curve fit you, right? So stopping for the day at a certain thresholds of losses and things like that, those tend to work. I'm just saying that we want to add those later. We want to make something that works first, and then we add those. So on this one, we kind of got the same sort of a deal where the ones that really seem to work don't give you a lot of trades. In this case, using a target of 2 and a target of 5 in that one. But really the best one is probably this one right here. Yeah, this one does not happen very often. So this is actually kind of what I expected, to be honest. So like the RSI has like some efficacy, like you could get it to break even or close to it. Well, actually no, I take that back. So it's like the general use of RSI, it does tend to work, but there are certain situations where it's really, really poor. And trading against it in those situations is slightly profitable, but probably not enough for you to make a really profitable career out of, right? So probably it would be better to come in here and to say, trade the reversal on the RSI, but not when R squared is greater than 8 or spot 8. You know, something like that. And it did, at least on that one, it did work better on short trades, which is a little odd. I think I kind of want to change it back and just say only use the straight target, but let's just give it, oh, you know what? There's a stop. That'll do it. That'll do it. Let's give it a really wide stop, because in this instance, you're going to have to take on a lot of risk to do it. So let's try that. I think fat tailing the RSI gives better results because you never see someone getting rich with it, but you see a lot of people getting broke martingale. Like, yeah, exactly. Oh, okay, so that one was way better. That one was way better. 15,000 in a year, that's not bad. So this is what I was talking about earlier. You remember that, Kyle? When I said, well, you're going to get a lot of these where equal risk reward and you're going to get 51%. And so you can sit down and you can say, well, if you trade it over this time period and it matches the back test, you would have made money. But is that really good enough to say that for sure that the result is not just random? Kind of hard to say. Now, there is some outliers here, right? So there's a couple of these where you're using higher time periods. So those are like in the 20s and 25. But when you get into some of these higher time frame ones like 80 and 90, over an hour, I guess, there are some situations where it looks like you are extremely likely to get a profitable trade. I mean, so like over 20 trades, that's not a big enough sample to say, but well, here's this one over 41 samples. Like that's pretty good. I don't really get one with a good sharp though. So if we come back to this one that did the best and we look at do the analysis on it. Okay. So it did do poorly. Oh no. Oh, now we should I changed the stop. So before it was only using an 8-tick stop and I said, "Oh, that's too small. That's too small." So he changed it. So let's come back here and let's just get the full set here just to be like extra sure. We go 16 to 32 by 4s and 1 to 5 by 1. And I'm also going to come back and I'm going to say R2 Ninja script property public double R2 threshold get set okay, and up here I'm going to say R2 threshold equals 0.8. And I'm going to say right here, R2 threshold. I misspelled it somewhere in all of this. If this compiles, I'm going to be super proud of myself. Use ATR stops. Was it so like what? It's breaking the ATR too, or what? Okay, so that did build. So then I can come in and we can do the R2 threshold as well. And we can say, let's do minimum spot 2, maximum of 1, and increment them by spot 2. And that should give us quite a good number of iterations. Thousands. We're only running it on a year's worth of data though, so it should still go through pretty quickly. And it's estimating 3 minutes, so I think that's good. I think that's good enough. Oh, yeah, you're still talking about the ATR. So, like, but here's the thing, Kyle. I've tried that before and it never works. We can try it. Maybe tomorrow we can try it. But every time I've tried setting your stops and targets based off of the ATR, it doesn't work. I think that the reason it doesn't work is because the ATR gets so high and then you're looking for these big winners and then the volatility starts contracting and so it doesn't work anymore. We're trying for an overbought and oversold and you have to take volatility. I mean, I certainly think that volatility matters. I'm asking if a percentage of the daily range really is an effective way to use that. So ways that I have found using the volatility that are effective is if the ATR is over or under a certain level to not run the strategy. But like, especially if I'm using like a 16 tick target, it's like if the thing happens, it happens. I don't know. But we did that on one. Which one did we do it on? I don't even think you were around, right? Were you? You've never seen me write that, have you? Because I have definitely done it where it's like you put a daily ATR on there and then you use a multiple of that. And you use that for your stop and set your target accordingly. And it did worse than my 16 than just doing 16 tick targets. You know what? One thing might be about it too is that, like, when you look at the ranges, you know, like the rotation for the S&P 500, it's like this, right? So we're taking advantage of all the trades that happen up in here, and you're saying like you need to adjust it for all of these, and I think the case is that these just don't matter enough in some instances, but it could be strategy specific. Okay. That is tradable. Interestingly enough, putting the R2 threshold lower seemed to improve things. Oh, and we didn't take out the shorts, did we? Oh, but it makes money on the shorts. Okay, I think I see what's going on here. Wait a second. Comment lines, build. Why did I do this? So I changed it. I tried to optimize the R2 threshold. And when I optimized the R2 threshold, it said that it did better if the R2 threshold was low. I should have recorded all of this. So that we could go back and pull the video and maybe I can make a full video out of decision making, right? And I'll have to edit out being mean to to Ace. Okay, build. So I bet you if I only do longs that the optimum is going to come out different. The issue with what we're doing here is that we're opening ourselves up to curve fitting, right? I'm allowing it on this one because the question is like how much trend is going into the RSI matter? Seems like it does, right? Like what we said about Bollinger Bands contracting will be better when R squared is low. Yeah, yeah, you might be right. Yeah. So if this one comes out and it still says 0.4, then I'm going to try changing it the other way and say only take it if it is below a certain R squared. Because I was thinking of it as like, like today. Well, today has been really weird. Can you believe that they're breaking out to new highs again after the market tanked so hard? The market's doing all sorts of weirdo things. And I am not hearing my squawk because my sound's all worked today, so. Wow. Maxine Waters and Jay Powell had a congressional hearing 30 years ago. Really? Oh, man. That's crazy. Win says we're opening ourselves up to a few more likes. Could we like the up like things? I don't know. Maybe. I mean, this anti-RSI strategy actually kind of appears to work. You know what, though? I don't know if I actually want to trade this one. I just want to be able to get on TikTok and say, guys, you can trade against RSI and make money. You know, it's like, hey, okay, so but what did it come out as? 0.4. 0.4 is still the highest. So now we're going to come back and we're going to change it. And we're going to say, oops. The R2 is less than the threshold. Still, look at that. One of those got to 53%. So we're getting there. Now, I want that Sharpe ratio to be higher, but, well, let's come back and look. Analysis. Okay, yeah. So the earlier part of the year didn't work as well, but now it's been doing okay. And there are some periods where it's kind of slow. Like it looks like it's something that in certain time periods works really well for some reason. So we might want to go and look at why that is. And we might be able to optimize it further based off of that. But for now, let's just make that one change. Look for it to be below that threshold. See if we can get better than the previous one. So this is where having these little runs from before down at the bottom are just really nice. We'll be able to see what the profit factor and percent profitable changed based off of that one change. I'm only doing longs. Because the thing that bothered me was that with the one optimization, it was only the longs that worked. And another optimization, it was only the shorts that worked. So we got to sort that out. Right. So I'm going to run it through just the longs. And then if that works, if this one is greater, then, because the question that I'm asking is does the trend matter differently for longs versus shorts? If there is some sort of asymmetry to it, where there's something that we can add to the shorts and the longs that makes it better, then that's really good, because there should be some asymmetry between longs and shorts. Otherwise, like with the way that we have it right now, like the thing is if we make money, we're only going long and we make money, then it's kind of like, well, like anybody that's going long this year makes money, right? If we only do shorts, well, in 2020, could you have made a lot of money from only going short? Well, because of how crazy things were, yes. So we kind of have to deal with that, right? Understanding your data set helps, doesn't it? If we're above yesterday's high, don't go short as much. Well, that would be a good one to try, is to say only do this when we're above yesterday's high. We could go back and we could try the earlier thing that we had where kind of like what we had with today's high, but we could say only do it if we're above yesterday's high. I thought stocks only go up. No, actually sometimes they go up. Yes. XXX10. But sometimes they go down, actually. Common misconception. You need that nuance, guys, right? You can go along below yesterday's low because it's... yeah, probably, right? They also go sideways. Yeah, I mean, yes, but in my mind, sideways is just a combination of ups and downs. For the kind of strategy that we're making here, sideways is not really the same thing. I don't know. There's definitely like, don't trade it if it's sideways for sure, but it is kind of suggesting that when the trend isn't very strong is when this works better. So it looks like that when the trend is strong going into it, that it's, oh shit, okay. So that filtered out a lot more trades, but it was a significantly better profit factor. So let's keep it that way. And let's do this. We got enough time to run it one more time. All right. Do you think tech stocks are going to dip even lower or continue to rise steadily again? You know, I don't know. I'm having a hard time sorting out what's going on with the rotation right now, because it is true that the yields have improved. Today they increased a little bit, but they didn't. They were just retracing what happened overnight. So could tech stocks do well? Yeah, maybe. One of the things that I see a lot in this market that really bothers me is a lot of people using the market as proof of a thing. So like I saw this person the other day and they were like, well, some people say that Bitcoin would be useless, but Bitcoin is already bigger than some countries. And I'm like, okay, and so you don't sit down and think like maybe it's overbought? Like... So the big stat that everybody's talking about right now, right, is how those 5 tech companies are like, you know, the majority of the market cap in the S&P 500 right now, right? And I kind of have to sit at, you know, and everybody's saying, well, this is an argument for why we need to, you know, break these companies up and that they have too much power. And I'm like... yeah, but maybe they're up because millennials like to buy tech and they're not actually worth as much as people think they are. And if the Federal Reserve wasn't pumping so much money into the system, then maybe they would come down and they would be more constrained relative to the rest of the market, you know? What is your average hold time on futures? I took a position yesterday for a reversal on MK2, down a bit, but willing to hold an average at certain points. Not sure how long I'm going to be holding. Well, I'm usually not holding for more than 30 minutes, to be honest with you, unless I really think I've got a good runner and I might hold it through the whole session. But I only trade for 3 hours, right? And you got to realize that once you're holding something for hours, you are in a different world. You know what I mean? You are swing trading at that point. So, yeah, no, really, no longer day trading. Yeah, exactly. Okay, so I think that we crashed NinjaTrader with that last one. Did we run out of memory? Yep. We ran out of memory. You receive. I'm not going to tell you about that. Why is this unresponsive page? Well, okay, so it's NinjaTrader's clearly crashed here. So, and the task. Wait for the memory to clear. We're still alive, right? I can't even see. Because that tab died. Open it back up and try again. There's a bunch of Fed speakers today and testimony, huh? Oh, and we can close this. Save. I'm happy that Brandon made money today, but I'm so mad that we screwed up Gabby. Ugh. I think she would have tried buying that too. I think that she would have made money today, so it's just gonna make our analysis that much harder, right? Flashes? The thing that I'm focused on with those the UFOs is that their movement is not what our current technology is capable of, according to the military. And it's starting to sound like that it is so much so that they are skeptical that it could be another country too. Okay, so we're going to change this back to, I'm going to change the optimization stuff around a bit. So I think that it was firmly established that spot 4 was best. So we don't have to test that. RSI period, though, we can change that from 5 to 200 on 5s. And we'll use a 32 tick stop. And we'll do targets up to 4. Oh. And then we have to come in and select our data series. Actually, let's try really going back. Include commission, run. Yeah, Pinterest interests me, but I don't think that I would get a very good audience on Pinterest with what I do. So We are pattern-seeking animals. We fill in a lot of... Well, yeah. I do think... Well, let's go back. We have to go back and watch the video. You'd have to say which video you're talking about, where you see blinking lights or something like that, right? I would say that the videos that we've seen very much look like spacecraft. And I would have a hard time understanding how any of those things could be like an animal or a natural phenomenon. Because we're talking about like squares and stuff. Unless you agree, you believe in a God isn't based on evidence. Yeah, so the decision-making process was that it doesn't prove that it's true and it doesn't disprove that it is true. So then you have to go into why markets exist to make your decision. Okay. Oh, gosh dang it. I optimized on profit factor. Ah! Maximum net profit. Okay. Try that again one more time. I'm kind of pressing it here, but I want to show you guys this before we go. Make sure that my work machine is turning on. When you don't understand something and then propose an explanation, well, no, it's not. I think that so I guess we should go and modify our little PowerPoint, right? Because there is the wait for more information point, but then there's also the scientific process point, right? Which is then based on the evidence, make a theory about why it is the way it is, and then conduct tests and collect evidence to see if you can prove why it is the way it is. No, I didn't agree that one shouldn't hold a belief without evidence. You missed that part. Let's go back. You missed that part. Okay, so here's our thing. So we come in and we say, okay, we're talking about it, so it's relevant. We've gathered the empirical evidence, and in the case of God, we have shown that there really isn't necessary. Well, I mean, there's some things that people would consider evidence, but I'm going to say for the sake of argument that there's no evidence, so there's nothing to prove that the claim exists. There's nothing to disprove the claim. We do have to make a decision, though, because if you're wrong, then you're going to go to hell. So then we get into the why markets exist. Now, you claim that to believe something and to act as though something is true is what is the word that you used? What did you use? Oh, you didn't say that. One shouldn't hold to believe without evidence. And I'm saying no. I think that you go into why markets exist and you go through your own decision-making process, which is going to be different for each person. And each person is going to be optimizing based on different things. And you make a decision based on what your optimization is. It says if you care about true beliefs, but that's the thing is I don't think I actually do. Here's what I care about. I care about me and my family and making the correct decision for them. I care about what is the thing that is most advantageous for my life. What is the thing that is going to make my life the best and the most happy, and so on and so forth, right? It and is also in line with my moral beliefs, right? And so here I'm coming in and I'm saying, I think that my life is better and happier because I believe in a God. Ergo, I make that decision, even though I can't prove or disprove that it's true. No, it's not. A discussion about a person who doesn't care about true beliefs is a waste of time. See, here's the problem. What does it get you? What does it get you? Okay, you're right about whether or not God exists, and you say that God doesn't exist. So you're right. What does it get you? How has it changed your life? Because for me, there's no benefit. I'm not going to drink or go and have, extramarital sex. So I'm not really missing out on anything by believing in God. Okay. So here we got the results. Okay, so when we added the shorts in there, it was not quite as good. It's definitely better long, which is probably a function of the S&P 500. The ones that really did well were using long targets, which, but I think that we were able to show that even with an equal risk reward that we were making money, right? So that, and then we come into some of the analysis bit. Okay, so here on this one, it didn't do too well until the end. So that's a little concerning, actually. Are all of these like that? I don't know. What is the harm in believing in pixies, spending 3 hours on a Sunday singing about and talking about pixies? Okay, so we had that discussion, but it was leprechauns. So the question was, do you believe in leprechauns? And we went through and we said, okay, is it relevant? We're talking about it, and I've agreed to devolve through this question. So we'll say, yes, it is relevant. Let's gather empirical evidence. I have not seen any empirical evidence to suggest that leprechauns exist, okay? Does the evidence prove the claim? No, it doesn't, because there is no evidence. Does the evidence disprove the claim? No, I don't think that anybody has disproven that leprechauns exist. Do I have to make a decision? Because I am agreeing to talk about it and say whether or not I believe leprechauns exist, I'm going to say that yes, I do have to make a decision. So then we have to go into why markets exist. So then we go into my market making decision making. So what does the market believe? Well, the market does not believe that leprechauns exist. How wrong might they be? Well, they might be. This is like a 1 or a 0 sort of a thing. What does the historical data say? I don't think that. How likely are they to be wrong? Well, because there's no evidence to suggest that leprechauns exist, probably the chances are that the society is right about leprechauns not existing. But how wrong might they be? Like, what would be the impact of if leprechauns existed? How negative would it be? Or like, how much would I have to benefit from believing in leprechauns if leprechauns didn't exist? And I'm going to say there is none. That's different with if there's a God, right? If there is a God and I believe in it, then there's a really big benefit to it, right? But it's also different about what society believes, because society does believe in God but doesn't believe in leprechauns. So based off of this decision-making process, I'm going to say that it is better for people to not think that you're crazy and so forth, to believe that leprechauns do not exist. And so that is the decision-making process that I have decided, is that it is best for me to say that leprechauns don't exist. Does that make sense? You already said that you didn't care if it was true. Well, I did within the context of that question, yeah. This is not your position that pixies don't exist. Well, but you were asking, you want to talk about pixies. Considered scientific, it must be able to be tested and conceivably proven false. For example, the hypothesis all swans are white can be falsified by observing a black swan. That's true. But that's what I'm saying, is that sometimes you have to make decisions without a perfect knowledge of something. And how do you decide to make that decision? And I'm offering up that happens, and here's how you can potentially go through all that, right? Now, maybe you might try and optimize your decision-making process for something else. But I say, like, what is best for me and my family and my people, right? If you were to say, what is the best to have, like, minimize the number of false beliefs that you have? Okay, sure. But that's the whole point of what I'm saying, is that sometimes holding a false belief is beneficial. That's why this mechanism exists in people that causes them to believe in things that aren't true. Because it is beneficial to the species in the society and their survival. They have benefited from believing untrue things in the past, and that's why we do that, right? You get what I mean? And so here, with the market, is it necessarily beneficial to minimize the number of false beliefs? Well, I think that in the markets that would matter more often than not, but there are certainly people out there today making money off of false ideas, at least in the short term, aren't they, right? But the question as it pertains to markets is, what decision-making process results in the most money? Does it benefit you to think that you owe me 10 grand? No, because if it doesn't actually result in you getting 10 grand, I don't know if it matters what you think. But if you think something and it causes you to act in a way, if you say, I think it benefits me to believe that I can get 10 grand, and then you're going to go out and act on that belief, even if it's irrational, and go and make that 10 grand happen, right? It's comforting to you, maybe. Okay, sure, fine. I don't think that well, I don't know. Like what? So here again, we have to go into the decision-making process. How wrong might you be? Like, what is the consequences if you're wrong? Depends on the situation, right? Well, yeah, a belief in God is comforting, and it is a benefit, sure. But I also think that there are social and societal benefits to believing in God too. I think that especially where we live, that you can be more successful if you believe in God. So is meth is comforting? Yeah, but here's the idea. If your belief was that meth is okay, if you're wrong, there's a really big detrimental effects to if you're wrong, right? So that wouldn't fit into that decision-making process, right? Yes, you think your fellow need control? Oh, I don't think that it's the control aspect of it that makes religion beneficial to them. I think that it is the unity and the cohesion and the impact that ritualistic behavior that is like a part of what we are as a species. I think you misunderstood what I was saying. I care too much about not having false beliefs. Yeah, I mean, and what I'm saying is that if you care so much about having false beliefs that you dismiss all things that are possibly true, but you haven't proven before, you're going to miss out on a lot of opportunities. I'll leave you with that because I got to get going. Stay profitable, friends.